Ladies and gentlemen, good day and welcome to the Sigachi Industries Limited conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anuj Sonpal. Thank you and over to you, sir.
Thank you. Good morning, everyone, and a very warm welcome to you all. My name is Anuj Sonpal from Valorum Advisors. We represent the investor relations of Sigachi Industries Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings conference call for the fourth quarter and financial year ended 2022. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings con call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings conference call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now let me introduce you to the management participating with us in today's earnings call and hand it over to them for opening remarks. We firstly have with us Mr. Amit Sinha, Managing Director and Chief Executive Officer. We also have with us Mr. O.S. Reddy, Chief Financial Officer. Now, without any further delay, I request Mr. Amit Sinha to start with his opening remarks. Thank you, and over to you, sir.
Thanks a lot, Anuj. A very good morning, everybody. It's a pleasure to welcome you to our first ever earnings conference call for the fourth quarter of the financial year 2022. Firstly, I hope everyone is keeping safe and well. Given that this is our first ever earnings con call, in the interest of some of the people who are new to the company, let me first start by giving a brief overview of the company. After which Mr. O.S. Reddy, our CFO, will brief you on the financial performance of the quarter and the review. Sigachi Industries was incorporated in the year 1989, and today we are one of the largest manufacturers of microcrystalline cellulose in the world. Our company manufactures high-quality cellulose-based excipients, which predominantly finds usage in the pharma, supplement, and the food industry. The company has created a niche in manufacturing highly innovative pre-formulated excipients and are using and selling 60 plus widely used excipients of international quality and standards apart from customized solutions for customers. From our state-of-art R&D facility, we ensure continuous innovation to efficiently meet evolving customer demands. We have 2 manufacturing facilities in Gujarat and 1 in Telangana, from where we ensure supply chain reliability for our customers in India and across the 47 countries where we export. Our total capacities from all these 3 facilities is more than 13,000 metric ton per annum, which we are further enhancing through our ongoing capex plans to reach 20,000 metric ton per annum. We at Sigachi have a global sales and distribution network and exporting to more than 47 countries across Asia, America, American continent, Europe and Middle East. I will now request the CFO to brief you on the financial performance, after which I'll give you an operational highlight for the quarter and the year. Over to you.
Thank you, Amit sir. And very good morning, everyone. Let me first brief on the fourth quarter financial performance first and then the full year financial performance. The operational revenues for the fourth quarter were rupees 72.5 crores, which grew by 40% year on year. EBITDA reported was rupees 14 crores, growing approximately 28% year on year, and the EBITDA margin stood at 20.15%. Net profit after tax reported was rupees 11.6 crores, an increase of 28% year on year, while the PAT margin percentage was 16%. Coming to the full year financials, for the financial year ending 2022, the operational revenues were rupees 250 crores, a growth of around 30% year on year. EBITDA stood at rupees 53 crores, representing a growth of about 37% year on year. EBITDA margins were reported at 21.21%, while the net profit stood at rupees 40 crores, an increase of 32% year on year, while PAT margin improved to 15.98%. Now I hand over the call back to our MD to give you the operational highlights.
Thanks a lot, OSR. On the operational front, Our revenue growth was mainly driven by the increased demand of microcrystalline cellulose across all the industries, with volume growth of nearly 13% and realization growth of nearly 19%. We were able to successfully pass on the higher input cost to the customers, which marginally improved our margins on a quarter-on-quarter basis. The blended capacity utilization across all the three plants increased to 93.27 in FY22 as compared to 89.29 in FY21. The sale of export products increased to 75.4 in FY22 from the previous year of 73.6, with the continuous efforts to enhance the global client base to marketing and customize products for various applications as per the requirement of the customer. The company is constantly striving to improve upon its R&D capabilities and cost-effective manufacturing processes, and thereby remain on as a manufacturer of choice with the highest quality standards and the certifications. The consumption of material has reduced to 48% from the 52% due to adoption of cost-effective processes and favorable product mix. And a focus on high margin yield product mix and cost-effective manufacturing processes and effective management of inventory resulted in increase in EBITDA and profitability for the year 22. For the coming years, we expect that the growth trend will continue with the current profitability at sustained levels. Furthermore, our capacity addition will be in the later part of FY23 and will also be contributing to the additional revenue growth in the coming financial years. With that, we are open to the floor for question and answer session.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. We have the first question from the line of Amit Kalyanpur from East India Securities. Please go ahead.
Yeah, thanks for the opportunity. Sir, my question is that while we have seen revenue growth on a quarterly basis, which is significant, we have also seen a significant rise in the receivable period. I believe on a year-on-year basis, I think it's moved from about 670 odd days to about 88 odd days. So what could be the reason for this, and do you think this is a sustainable receivable period going forward?
Yes. This is in the last quarter, especially in last quarter of the financial year, the receivable, the sales turnover itself is very high. That leads to automatically higher receivables. That is one part. And the other part is some of our long-standing customers, they just requested for a little higher period as a one-time credit period. Because of that, it is flowing slightly higher when we compare to previous periods.
So would it, do we expect receivables to come back to the previous year levels?
Yes, yes, it will come back. Already it has come down post 31st March 2022, and it will come back.
Okay. Sir, my second question is, what could be the capacity utilization expected in FY23 and 24?
23.
Yeah. Oh, sir, please go ahead. 23, 24 capacity. Right now we are running 22, 23 financials. 22, 23 financials. Last quarter the expanded capacities will come into place. The brownfield oil project, which the expansion is going on at our Dahej and Jagadia units. And 23, 24 gradually it will increase the capacity. Total capacity available would be 20,000 metric tons, and it may be reaching around 17,000 or so, 17,000 metric tons.
Okay. In the current financial year?
Not in current financial, 23, 24. 22, 23 in current financial year, right now we are at 13,000 metric tons. Maybe we'll exceed around 1,000 metric tons more, because the expanded capacity will come in the last quarter. That too we will not be able to utilize the complete capacity. around 1,000 more, 14,000 metric tons will be there.
Okay. Yeah. Thank you. Thanks a lot for that.
Thank you. We have the next question from the line of Rajesh Kumar from NB Investment. Please go ahead.
Good morning. Thanks for the opportunity. Sir, my first question is, we are still a company depending on a single product. So is there any plans to de-risk it? Because most of our competitors have other different types of products to sell. So is there any plan from the management to de-risk this?
Thank you, Rajesh sir, for your question. Appreciate it. This is a very, very valid question you have. If you see our product portfolio, historically we were only one product, which was microcrystalline cellulose. Gradually, we have moved on to integrate other inactive ingredients or other excipients into our food. So with that, we are having pre-formulated excipients. So that's a value add to what we were already doing. Pre-formulated excipients itself has to take in certain other ingredients before it can be sold out to the customer. So that's a value add. Over and above that, like it was there in our RHP, we are looking to expand into cross-carmellose, which is a cross-linked cellulose. So that's another related diversification. As regards going beyond this, there are certain activities on the table which are underway. As and when things get firmed up and it's appropriate, we will be declaring to the stock, sir.
Okay. Thanks for the information, sir. Sir, you mentioned about this cross-carmellose sodium, which we are coming up in Telangana state, I think in the Kurnool or somewhere.
Yes.
So who are the competitor for this product in India? How are we going to differentiate ourselves from the competition? And last is, why the margins and realizations are better in this product?
So,
okay, I'll repeat it once again. First is, who are the competitors for this product?
Yes. So we have the world number 2 Indian joint venture company by the name of Gujarat Microvax, based out of Ahmedabad. They would in India, they would be our prime competition, and across the world it will be DuPont. DuPont has another brand for cross-carmellose sodium, and the Gujarat Microvax has a local brand for Indian market, and they export also to an extent. So these are going to be our prime competition.
Okay. So now, how are we going to differentiate ourselves from the competition to get this business in our favor?
It will be a mix of the quality attributes of the product and the pricing. When you have the world leader, there is always a premium, and there are supply chain issues in terms of minimum order, or there are, the world leaders usually are very, very stringent in terms of their the way they operate. We will give flexibility to our customer. The very fact that we have 60 excipients, 60 products in our cellulose line of portfolio, which even the world leader don't have, indicates our affiliation with the customers and their feedback, and we coming back with products which are actually meant for their specific purpose. And this is what is going to differentiate us from this, along with the mix of quality and pricing, would differentiate us from the other world leaders.
Very good, sir. So then the same one I had asked was, why the margin and realization are better for this product compared to our existing product?
That's right, sir. We expect margins and realizations to be better than our current line of MCC product and pre-formulated excipients.
So what are the reasons? Is it because there is not many players making this product, or what are the reasons we'll get higher margins in this product?
So that's a very typical question, sir. One of the prime reasons are that this is a very, very technical product, much more technical than what our current line of product is. So that explains your first point that there are not many players. Rather, there are not many players who actually produce of the quality what is required by the customer.
So is this product getting imported currently, sir?
This product is also getting imported currently.
Oh, so that means you are trying to bridge that gap.
So we are showing this as a substitute to imports, and also because we have our network and distribution and customer base across the 47 countries. Our interest is to see that we give them one more product to latch on and be able to sell it in the supply chain which is already established. There is another synergy which can come in. The raw material for this product cross-carbamylose sodium is going to be the wood pulp itself. Wood pulp is our primary raw material and for the cellulose of MCC, and it will be the same for the cellulose of cross-carbamylose. So that would mean that we will have higher quantities of pulp being purchased that will give us stronger hands in terms of negotiating a better deal of supplies.
Nice to know this, sir. Am I allowed to squeeze in one?
Yes, sir. Please. We'll be very happy to answer it.
Yeah. Sir, I think you had mentioned in one of the earlier calls regarding the nano cellulose that is being developed in Europe and other developed countries.
Yes.
So that is So are we working on this product as on date?
So we are working on this product. So we have done some basic groundwork, but what we realized was that even the R&D for this setup is going to be a very expensive thing. So we are trying to look around with certain international players and institutes to see if they have the technology and if you could kind of buy in the technology or license the technology to be able to produce it on a trial basis and then work on seeing if it could be a commercial success for us.
But there are applications where it can be used in India also for this product?
Yes, sir. Applications are tremendous. If we go on to the Google, one would see that the applications, because of its nano size, by its nature, it forms a gel. And it becomes a transparent gel. And that gel can be film formed into a very thin layer which prevents oxygen to seep in. So basically, wherever there is food packaging, I'm just giving an example, typical example.
Sure, please.
Wherever there is a food packaging which uses plastic film for oxygen control, no air control, there a nanocellulose sheet could be used, which will be very, very thin and which will prevent oxygen penetration and increasing the shelf life. So that means there could be a way by which we reduce plastic usage in food packaging and bring in this renewable source. This is just one of that. The nanocellulose, when it is combined with certain composites, can be as strong as steel and as light as aluminium.
Correct.
So
correct. You had mentioned this, correct.
Yes, that's right, sir. That's right. So there are many applications which go into it. If it is calendared well, calendering is a technology of making a proper thread out of it in a standard form. If it is calendared well, it is stronger than Kevlar. Kevlar is a brand name of DuPont, wherein it is used in anything like parachutes or any other kind of format which needs very high tensile strength and very lightweight. So I believe, sir, that this is going to be a game changer maybe another 5-7 years down the line. And we intend to be prepared for it as and when the technology absorption by the customers is aligned.
So that means you said you're already in discussion. Like what is the time frame we can look for? Does it take 3 years, 5 years for any positive result in this regard?
Yeah, I know, because it is a very longish project, Rajesh sir. It will be very difficult to commit on a timeline, but we are doing groundwork behind the curtains to see that we have an appropriate partner and subsequently we have an appropriate R&D to be able to manufacture it the way it intends to be manufactured. Once the R&D is in place, then we will work on the commercial viability and what scale it can be a viable project so that our customers start looking at us as an option.
So till the time it happens, so now you are going with this cross-carbamylose, sodium product also. So in the next 2-3 years, you have some products already lined up for launch and other things in line?
Yes, sir. That's right, sir. And as and when things are firmed up, we will be declaring it out and we'll be very happy to answer further questions thereafter.
Oh, very nice to know, sir. Sir, can I ask one more question?
Yes, sir.
Okay. Yeah. Sir, first one is, sir, in one of the interviews post listing of our stock, you had mentioned going ahead, the food industry is going to contribute almost 30% sales in FY23.
Yes.
So my question was, how is this sudden change is possible?
So, sir, we export a reasonable quality of our cellulose-based ingredients to the food industry even now. The percentage is on the lower side, but what we see is that we have gradually started giving in certain food premixes which goes as a dietary fiber or as an emulsifier and stabilizer in the food industry. So gradually this product range would continue to broaden because of our base product of cellulose. Cellulose by its technical nature is a dietary fiber. So because of this dietary fiber, it is an additive into anything which needs to be good for health. And that makes it a very strong point. So, likewise, we can kind of add in other ingredients, and we can have a pre-formulated food ingredient which goes into any other food premix. So on that basis, we had come out that this will be a substantial portion of our revenue going forward.
And you feel that is sustainable also going ahead?
Yeah, we do feel it is sustainable because I would not want to do anything which is not really sustainable and growable. I mean, anything which can have growth in it and is sustained is what is meaningful. Otherwise, it is not really the best option.
So, regarding the sales contributed by the top 10 customers for the company, you had mentioned that a major portion of our sales are done through the distributor channel also.
Yes.
Is it possible to share us, first of all, how much of our sales is done through the distributor channel of the overall sales? And second is, in the top 10 customers, is it possible to know how many of them are there?
So I think CFO might be able to give a good breakup, but what I can definitely say is that in India, which constitutes around 30% of our revenues, all of it is primarily directly to the customers. Sorry.
30% of the overall sales.
Yeah. And in terms of our biggest customer, which is our own subsidiary, Sigachi US Inc., that is directly our own company, and they are doing the last mile connectivity with the customers in the US and Mexico region, the North American territory. So there again, it is directly through us. There is no distributor involved. In terms of other regions and the other top four, maybe the CFO might be able to give a good breakup.
Yes, sir. This overall, our almost 30-35% of our top customers are through distributor. Balance is our direct customers. Our Sigachi US INC also, that is a US-based subsidiary company, only one subsidiary company of Sigachi, that contributes around 20%. And overall, 30% is from agents, through agents, and 70% of the top 10 customers are direct.
Oh, very nice to know that, sir. Sir, my last question is, there was a concern which was mentioned in the IPO that RHP, where that anti-caking agents may cause degradation of vitamin C in food products. So does this affect the sales of MCC as an anti-caking agent in food grade industry?
No, sir. In fact, on the flip side, if you see our volumes and sales over the last 3-4 years, or in fact historically, you would see that there has been an increased trend. So we don't see this as a challenge. In fact, Saputo Dairy, the largest dairy of New Zealand and Australia, we are one of the biggest suppliers for anti-caking agents for their cheese industry. So and naturally that cheese goes in with many other ingredients where there might be vitamin C, and we have not faced any such challenges that technically the ingredient is not suitable for vitamin C. Vitamin C by its very nature is oxidizing in nature, and it needs to be encapsulated in its own powder. I mean, you can't have a naked vitamin C. If it is naked, then it degrades, it oxidizes and loses its potency. So it has to be encapsulated. So I believe that any other ingredient coming in would not really be able to impact vitamin C the way it seems to be.
Okay, fair enough, sir. Thank you very much. If I have any question, I'll come back in that case, sir. Thank you very much.
Thank you.
Thank you. Participants are requested to please restrict your questions to two questions per person. Participants are requested to kindly restrict your questions to 2 questions per participant. We have the next question from the line of Voganj Jeswani from Mittal Analytics. Please go ahead.
Hi sir, Yogansh this side. Thanks for the opportunity. Sir, I'm new to your company, so a couple of basic questions to start with. If you look at the last 5 years of our performance, it's very pleasing to see that, on an average, we have grown our business, our top line by almost 25%. So if you could just share a bit detail on your journey of these last 5 years, how we have been able to grow this business, if we have added new customers, new geographies or new products, what has led to this phenomenal growth of last 5 years?
So that's a very interesting question, and I think I'll be happy to answer it. So one of the prime reasons which has led to a substantial increase in or growth in our company has been me, completing my MBA from the ISB, and thereafter the seniors and the elders, the earlier generation of the company, believing in me and my thoughts and my vision and giving me a free hand to kind of get things going. That was one of the prime reasons that you would see that from FY19 or so, there has been a kind of a change in the way we have been operating and the way we kind of have our EBITDA margins. That is one of the prime reasons. The overall pharma and the food market continuously growing has been another significant reason that, in a growing market, it's much easier to grow and penetrate and capture customers. The third reason has been our decision to incorporate Sigachi US Inc. and kind of, take forward the sales team there in connecting up with various other end customers in the US region. By virtue of doing that, what we have established is that, we have the last mile connectivity to all the pharma customers, or rather majority of the pharma customers in the North American territory, and thereby increasing our product portfolio would only give us comfort of servicing our customers, already cemented customers, much better. These are the prime reasons, and of course there are many other reasons, but these are the, I would say, are the prime ones.
Yeah.
I hope I answered your question.
I'll add with the permission of the...
Yeah. OSR, please.
Especially after the takeover of the complete control by our present Managing Director, Mr. Amita Sinha, with the blessings of senior management, he has debottlenecked all wherever in plants, wherever there is a possibility to debottleneck and increase the capacities, he has increased it, and thereby we could increase the capacities without adding much capex. Small capex added, and then we have increased capacities like anything, and that is one parameter. The fixed cost remains almost same, and capacities improved, thereby sales increased, and also increase the strength of R&D department. He has concentrated on R&D and then improved the R&D department strength by adding value to our products and also addressing the pain points of the customers, more aggressively doing R&D activities, and thereby added value to the customers and the customers. So that we have got repeated orders from the existing customers and also added new customers every year on year. That is also one of the factors. Yeah. Thank you, sir.
That's really good to hear, sir, the kind of inputs you shared. That's really helpful understanding more. So just to follow up on that, sir, when you joined till now, what has been the contribution of our business coming in from US market?
In US market, the contribution is right now overall sales 20% is there from Sigachi US. In the US region, you mean to say the country-wise 26% is the 23% from USA itself. The sales revenue.
What was it, sir, 3-4 years back?
Last year it was around 15.5%, and before that it was 9%, and before that it was much lower. It is increasing tremendously. Last FY22 it is 3%, FY21 it is 15.5%, FY20 it was around 9%.
Okay, that's a great growth, sir. So, sir, another question.
This is the operator here. Mr. Jeswani, I would request you to kindly follow up in the queue for follow-up questions.
This is just my second question. If I can just squeeze in, otherwise break the flow. Just last question, and I'll get back in the queue if you permit, please.
Sure.
Thank you. So, sir, if I understand the excipient business correctly, I'm not very much aware in the details, but excipient as an end product for pharma is a very, very small cost, right? And there are several big players like DuPont. I think Evonik is another big player. So what we have seen is that it's very difficult to break into any new customers because the switching cost is not so high for them, and the end product price is not very high for them, so they don't want to take any risk in terms of changing the product of the vendor and risking the quality and all. So how do we also face this challenge? If yes, what are we doing? How have we been able to add these new customers, these new territories? Because in excipient, I think it's very difficult to break into a new customer.
So I would say that this is both a challenge and an opportunity. Challenge in terms of what you already spoke, and opportunity that because the price points are insignificant in the end use, the customer stickiness is very high. So if you have a customer base, you can be rest assured that if the customer is growing, you are bound to be growing. So that's one part. Now, in terms of the challenge and the countering, the way we look at the challenge, the pre-formulated excipients or value adding more than what we are doing is kind of one of the best things we are doing. I would indicate you that BASF has come out with a product which is similar to Beartab, our pre-formulated excipient, much later after we have taken it out and much later than we have put it into the market. So that indicates our resilience in terms of bringing out what the market needs. So this is the way we have been countering this. Otherwise, I do agree that the big players like DuPont or BASF are big, but however, there are certain strengths which lies with the mid-sized players, and they can actually turn around things much faster and quicker based on what the customer needs are. Thank you, sir.
All right. Understood, sir. Thank you.
Thank you. We have the next question from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Yeah. Namaskar, sir, and thank you for this opportunity. Sir, firstly, sir, if you could clarify, has the board proposed any dividend payout for this financial year? And if not, the key reasons for why not being in the dividend list?
So thanks a lot, Saket. So board has right now not proposed anything. Probably in the AGM this would be declared. Right now there is no such proposal. But historically we have been paying out dividends every year, sir. So that way I believe things should be fair.
But sir, in just a general sense, is that with the results and the things out there, the dividend is also being declared at that time. If you could look at what the practice has been. So please look into the merit of coming with dividend when the annual accounts are finalized. So that makes some sense with investor community also.
Yeah.
Not at the time of book closure.
Yeah. I appreciate your concern, and we will definitely look at it. That's a very valid and thoughtful point, and we shall look at it.
Right. So for the forex loss part, sir, if you could explain, sir, what led to this forex loss for us? And do we have unhedged position? What is the vulnerability regarding the forex losses, and why did it result?
Yes. Here, almost our imports are completely, we buy raw material from outside India. That is, and also we have got a huge portion of exports, around 75%. That is, there is a natural hedging to the extent, and the balance, anyway, we utilize PCFC, TSFC, that time also that will be covered naturally. There will not be much risk against foreign exchange fluctuation. Mostly we have net receivables only, and always there is a positive, historically if you observe, there is a favorable this exchange fluctuation.
So we are only exposed to the dollar fluctuation?
We export dollar surplus. We are dollar surplus, and mostly our exports are with the dollar terms only.
Dollar terms only.
Yes.
Right. Sir, a very small point, sir. Firstly, sir, if you could explain to us the key challenges that as a company we currently have in our hand, and how are we addressing? And also, sir, the factors which gives you the confidence of growth, as you have already told that we will be coming up with some capacity addition 1 year down the line. But other than that, how are you visualizing things, say 4 or 5 years down the line?
Sir, Saket sir, in terms of key challenges, I'm sure you understand that geopolitical situation-wise, in terms of uncertainties, in terms of global supply chain, I see these as the prime key challenges at this moment. Other than this, the key challenges are not really significant. In terms of the second question for what is it that we're looking over a 5-year horizon, we are looking to be the market leaders. Like you can see that, we are growing our capacities by more than 60%. So we are looking to be the market leaders or continue to be the market leaders for this line of product and cellulose as a base and grow our product portfolio. Parallelly, we are also looking at other opportunities in terms of food industry and other industry in the pharmaceutical segment. And these are on the table, and as and when things get firmed up, it will be appropriately declared, sir.
Right, sir. But how are you addressing this geopolitical issue, sir? Is there any ways by means wherein you can address this issue, or we have to be dependent of, since our raw material is totally imported?
Yes, of course, our raw material is totally imported, but for the kind of volumes that we import, we have a lot of comfort with our suppliers in terms of, long-standing supplies. Additional supplies are from the South Africa, from the North America, from Sweden, and certain parts even from Indonesia. So these kind of, staggered supply helps us in balancing out, fluctuations if there are any from our suppliers. That is one. The second way of mitigating this is being in deep dialogue with our export customers so that we are able to, balance out these fluctuations of ocean freight and be able to give them prices which are reasonably competitive and which can kind of be sold out to the end customers. So that is one of the reasons that you will see the inventory levels are a bit higher than what they should be, just because, we are trying to balance out the outgoing freight and the incoming uncertainties. So that speaks of the increased inventory over the 31st March figure.
Right. Just a very small point, if I may squeeze in here, sir. How should one look at your employee cost, other expenses part in the P&L, sir? We find this other expenses component. What constitute it and what are the variable factors that affects the other expenses category? That's a substantial one. And also for the employee cost as a total percentage of sales, we have seen an increase for quarter-on-quarter also and year-on-year also. From year-on-year, we have seen from 4 crore to 5.5 crore mainly contributed to the increase in revenue. But how should these two components be looked into, sir?
Yes, sir. Thanks for the question. And this employee benefit expenses, as a percentage, when we see, last year it was 8.86%. This year it was 8.33% only. And in absolute terms, it may be it is a little higher, but as a percentage on revenue, it is much lower than previous years. And other expenses are includes the freight cost, which is increased in multifold. That's why there is an increase in expenses, but successfully we could pass it on to the customers. And there is no much negative impact on that.
Right. Didn't get you, sir. Last point.
The other expenses includes freight expenses. Freight increased multifold because of this COVID and non-availability of containers and hike in fuel prices and all these. Because of these reasons, freight has increased, but we could able to pass it on to our customers, and we could recover it by way of rising debit notes.
Right. And out of this total payout
Mr. Saket Kapoor, I would request
yes,
you
I'll
please
come in the queue, sir. Yes, sir. Thank you.
We have the next question from the line of Nagesh Rajanna from NR's family office. Please go ahead.
Yeah, hi, very good morning, and thanks for the opportunity. Very happy to see the way the company has been progressing, and also glad to hear, the kind of insights which you have personally brought into the system since 2019. Two quick questions. One, you did speak about a roadmap for the next 4 to 5 years. If you could just, elaborate a little more in terms of your vision, what are your strategic priorities? That's question number one. Question number two is you also spoke about, trying to be a leader. How will that happen? How could Sigachi become the market leader? If you could just articulate these two.
So I think these are very deep questions. I think our outlook and vision over the next 5 years is of course to grow the business, to have sustainable profits, and to be able to be the leader in whichever segment we operate in. Right now we are in the pharmaceutical food primarily. We intend to look at growing our product portfolio within these two segments and also look for opportunities wherever they arise. In terms of our strategic priorities, brand building is the number one priority at this moment. The second priority is having a culture of excellence. It could be efficient and effective internal processes, demonstrating excellence to customers every day, and a highly engaged workforce. Innovation has been our third strategic priority. It could be a product, process, or even a service and R&D innovation. Rethinking processes is another strategic objective within the innovation. And of course, new revenue stream exploration is always there. Our fourth strategic priority is sustainability. That is ecological, economical, and environmental sustainability. Digital transformation is our fifth strategic priority, and we believe without having a base, without having a digital transformation platform, we really cannot be growing sustainably. So whether it's IT infrastructure and IT backbone, data intelligence, data security, and having a Sigachi One portal for everybody, including employees, customers, and suppliers. Economics is our sixth and the last strategic priority, that is growth and diversification, our EBITDA focus, and fundraising for further capex. These are our overall 6 strategic priorities, and believe you me, these are the prime work of my job. These 6 strategic priorities, working it out to make it into objectives, and from objectives making into KRA, and then having a directly responsible individual for that particular activity. I hope I managed to answer your question to an extent.
Oh, you did. Thank you so much, and they're very, very sharp. Okay, and wish you all the very best.
Thank you very much for your wishes, sir.
Thank you. We have the next question from the line of Ashraf Patel from Molecule Ventures. Please go ahead. Mr. Ashraf Patel, can you hear us? As there's no response, we'll move on to the next speaker.
Hello.
Yes.
Yeah, am I audible?
Yes, we can hear you now.
Yeah. So congratulations for excellent set of numbers. Despite the global supply side issues, we were able to report volume growth as well as margins are intact. My only question is that given we have a strong traction in our core earnings, as per one of the outcome of board meeting, we were thinking to set up a ethanol plant. So I wanted to get more understanding on those lines. What are our plans? How is that venture supplemental to our existing business?
So thank you very much, Mr. Patel. I appreciate your question. I'll start with the first one. While we were looking at setting up the cross-Carmelos plant at Kurnool, we realized that the handover of the Kurnool land from APIIC, the AP Infrastructure Corporation, to the company was getting delayed. So parallelly, what we had done was we were doing the groundwork to have set up another facility in the special economic zone in Dahej. That's around 1.5 kilometers from our current unit. So what we have kind of homed on to is that it would be better that we shift the CCS plant to Dahej. That's at just adjacent to our old unit. And for the 25 acres land which has already been allotted, while the process for it continues, we are looking at ethanol as a potential product where we could kind of expand, given the kind of focus which is there for the country in terms of having an alternate or having an additive over the fuel, the crude oil. So this is what we are potentially looking at. We are working on seeing various other factors in terms of compliance, in terms of cost, in terms of revenue, and all that groundwork is being done. We have appointed a consultant towards this, and we are looking deeper into this subject. But I can assure you that we are on this job, and we are looking at whether this could align with our overall growth aspirations, and we shall keep you posted on this.
Sure, sure. Thank you so much.
Thank you.
Thank you. We have the next question from the line of Keshav from Raxan Investors. Please go ahead.
Hi, good morning, sir. So, what kind of impact can we expect on gross margins in the coming quarters due to inflationary pressures? And also, if you could talk a little about freight costs, what would they be as a percentage of sales currently, and how that has moved over the past 2 years?
Hello? Yeah. The gross margin is sustainable and it will go on. We expect a favorable gross margin in coming years also.
And on the freight cost, sir?
Trade cost also it is under control only, and there also we will not see any negative impact. Whatever the trade costs are there, we could able to pass it on to the customers.
Sure, sir. And sir, could you talk a bit more about how the global MCC industry is structured? So where are our global competitors based? How does the economics behave from place to place? For example, the cost of manufacturing, logistics, sourcing, raw material sourcing and all that. And are you seeing any sentiment shift from the developed economies to near base these products and produce locally?
So that's a very thoughtful question, sir. In terms of overall supply chain dynamics, we are seeing that this MCC industry will continue to be primarily focused out of non-developed countries, because this being a cheaper product compared to an API, it would be very, very challenging to manufacture it in a place which is high in cost and with negligible margins there because of high people costs and high facility costs. The fact that we are importing our raw material from US and then exporting it back to the US and still having such margins speaks about this the supply chain sustainable the way it is functioning out. All the units which are running in the EU region or the US region have been set up around 15 years or maybe 20 years back. There has been no recent setup of a facility in the developed markets. The market leader DuPont had set up a facility in MCC, one grade of MCC in Thailand around 10 years back. So that indicates that the market leaders are moving out to the developing markets for setting up facility and then exporting it back to the main developed markets. I missed the second part of the question, sir. If you could just speak up again.
Sir, you broadly covered all this, so I have my question answered. But sir, just one last question from me. So ROCs and ROEs of our business, our core business, are much higher than IRR of an ethanol project, for instance. So what exactly is the thought process behind this? And are there any potential synergies with the current products, or are there limited incremental capital allocation avenues in MCC? So why are we even venturing in this?
So it is an exploratory thought at this moment, and we are just checking the ground, sir. We're just checking out to see, if this could be a viable option for us, and because raw material sourcing, the low-grade rice, Kurnool is supposed to be one of the hubs of South India in terms of rice. So we are looking to see if this both could balance out, and we could come out with something which is a balanced combination of sales and margins.
All right, sir. Thank you, sir. All the best.
Thank you so much, sir.
Thank you. We have the next question from the line of Rajesh Kumar from NB Investment. Please go ahead.
Thanks for the opportunity. Sir, I just wanted to know, is there are any possibilities for any of our competitors or customers to develop any alternative products or technology which will affect the sales of our products?
Yes, sir. I get that question. For the last approximately nearly 60 years, cellulose-based excipient has been the prime focus for all the products in terms of inactive ingredients. So we don't see any challenge in terms of any other alternates. Starch was there. Starch is already on the lower side because of the way it is produced. And lactose is also there. Lactose has been there, but lactose sourcing is a challenge, and also lactose intolerance in terms of customers, in terms of patients. Lactose is not the most preferred thing. So we believe that, and because this is renewable, this is clean, we believe that there can be no alternate, at least for the foreseeable future, sir.
Oh, that is good to know. Sir, my second question is the realization had gone up from 102 rupees to 161 in FY22. So my question is, how much is it in FY23, and where we can see it in the next 3 or 5 years?
So realization is a combination of a lot of things, sir, which is a product mix, the market conditions, the rupee depreciation value. So among this, the only thing in our control is to see that the product mix is most suitable. And in terms of product mix, we have a combination of standard grade and special grades. Special grades are value-added products which kind of give comfort to the customer by addressing more than one challenge. And they are, of course, priced a bit higher. So when you have higher percentage of export grades coming in, then automatically the benefit kind of, the realization gets better. Historically, we have been selling, standard grades at around 75%, and the balance 25% having special grades, and we believe we can continue to be doing this.
Okay. So how much was the realization in FY20 this year, sir? This just FY20 to 161. So is it expected to go up in the near future?
Yes, sir. We believe that it will be going up, sir.
Okay. Sir, now the follow-up of this is, I think the food, supplements and cosmetics industry have higher margins.
Mm-hmm, mm-hmm.
So one is, why do they have higher margins, and will it remain like that for years to come?
So that's a very difficult question, sir. So in cosmetics, what we have seen is that the volume, the consumption, the quantities are very low, but the margins are phenomenal. It is much better. So we believe that this will continue to be there, though the volumes will be minuscule. In terms of food, I believe that standard ingredients don't really have the best margin. They are just a reasonable margin product. But if you are able to value add by taking in additional ingredients, by making in a combination, by giving additional products, so that the more than a couple of challenges of the end customers address, we will be able to gain better margins in the food industry as well. Food industry is a very typical market, sir. Okay. Nobody comes out with what they use, how they use, and who they use. So trying to break in is a very slow process. In the pharma industry, you at least have an obligation to declare. Okay. In the food, it becomes proprietary. Okay. So, but we believe food is the way to go forward, sir, because as the population grows and as the living standards move up, the processed food percentage on everybody's breakfast table is bound to get better and better.
Thank you.
Thank you, sir. Thank you very much for your question.
We have the next question from the line of Avinash Nahata from Parami Financial. Please go ahead.
Hi, good morning, and thanks for the opportunity. So my first question relates to the spreads of the business we are in. So as you said, wood pulp is our main source of raw material. Since you have been there in the business for long, I would want to understand, see, what has been the spreads for a standard or a very base grade material output we produce. So if we have to take last 5 to 10 years, because as an investor, as an analyst, we need to understand the volatility of the business. So my simple question is, spreads कैसे हैं in last 5 से 10 साल में? What has been the lowest spreads when you convert pulp into your MCC? What has been the highest spreads? What has been the spreads on an average? This is my first question.
So I just want to understand, when you say spread, what exactly does it mean?
So what you pay for your raw material, a major raw material like wood pulp in terms of tonnage or per kg, and you convert into your end produce, let's say a standard grade output. So you're selling it for 150, buying it for 80. What is that spreads, high, low on an average?
Okay. That's good. So our raw material, because it is a naturally sourced product and it is a renewable and a sustainable source, it has been rather steady. We have seen this fluctuate between a $700 per ton going up to around 900 or sometimes $950 per ton. This has been the price range and fluctuation. In terms of conversion, we are having an yield of nearly 89 to 90%. So that would indicate that if you take in 100 kilos, you actually come out with 89 kilos of the finished product. So this is the conversion part. In terms of our pricing, we are selling it, or we probably would be averaging maybe around $2.4, $2.5 all combined. The weighted average of every grade combined would be averaging around 2.3, 2.4. Did I answer the question, sir?
No, so I didn't understand, because raw material में आपने बोला $700 per ton, and what is this 2.3, 2.4?
This is the finished product sale price of the basic grade, which doesn't take in any other material other than the pulp. That's all is consumable.
And your total raw material is like 125 crores a year. So how much wood pulp would be? I mean, 50% is total raw material of the same price.
I think I can answer your question, sir. This in spread, the average selling price in the 5 years back, it was around 140 or 134, and now it is around 182 average price. It is a blend of all mix of products. Means when we take the raw material, it is the spread is around $650 to around $950. It is on lower side 650 when we take a spread of 5 years, and now when we take the selling price, it is from 134 to 182.
Okay, understood. Okay, one last So one more question. So we are exporting 75% of our total sales. So we are a country which manufactures drugs and have a massive food processing industry and export it to. So why is domestic sales 25% only?
Because we are concentrating on export markets, where within the available capacities, we are concentrating more on export market because better realizations are there. The balance, we are selling it in the domestic market. Going forward, the percentage wise, it may be everyone wants to increase the percentage of sales, overall sales to export sales only, because there are higher realizations.
Okay, since it's the first call, so I am just taking liberty.
Sir Nahat, I would request you to kindly come in the queue for follow-up questions.
Thank you.
Thank you. We have the next question from the line of Varun Sheth, who is an individual investor. Please go ahead.
Thank you for the opportunity. So my question is twofold. One, we are primarily a microcrystalline cellulose company and then expanding into cross-caramelized sodium, which is again wood pulp based and cellulose product. So how do we see our company, say 4-5 years down the line, becoming maybe a more than 1,000 crore company or whatever in terms of size and in terms of product? Are we looking at more cellulose derivative products available like methyl cellulose, ethyl cellulose, etc., and will diversify in that? Or how do we see, because MCC as such market is pretty small, so how do we see ourselves?
So like I answered in one of the other questions before in this call, We of course are looking for related diversification in cellulose base because the platform is already established, the supply chain for the raw material exists, and the connect with the end customers is already in place. So we are looking at that. In parallel to that, we are also looking at other core competencies and strengths where we have to see what else could be there, and things are underway and there are certain activities going on. As and when things are appropriate, we will definitely kind of break it out. I understand that MCC just as a single product is not really sustainable for us to kind of go beyond 1,000 crores. Very, very valid, sir.
So, sir, then just to follow up on that, would be how much R&D expenditure we would be looking to spend on a yearly basis if we have to come out with these kind of innovative products, etc. So, how do we look at that?
It may go up to around 3%. Right now, we are around 1.5%. 2%.
Okay, from this year onwards. From this year onwards, sir.
Yes, 3%. And even it depends upon the opportunity and then the requirement.
Got it.
We want to concentrate more on R&D, sir, going forward. Even right now also we are concentrating, but going forward we will increase our concentration on R&D.
Got it. And sir, my second question is on the realization. As you said, it's around 1,60,000 per ton basis or 160 per kg and is likely to increase. But if we see there is import data, there are companies like Signet which imports MCC and their realizations or their import price is round about 5,50,000 to 6,50,000 range. So is these products altogether different MCCs or we have room to grow there, or how do we see ourselves there? And Signet being the trader also earns 20 to 22% margin. So if you can highlight somewhat on that piece, sir.
So Signet, I would say, was in a very typical position where he had principals who were the world leaders way before the market kind of started maturing. And because he had the world leaders in his pocket, he was able to, and he was picking up volumes for an Indian market, he was able to squeeze in a good price and sell it out at a fantastic margin to India, to Bangladesh, and to certain nations around. This was one of the prime reasons, and because he had better margins, he was able to, squeeze out better, expand further, add in more principles. In terms of specifically having that purchase price, I would say that would not be a pure MCC. A pure MCC on the world number 1 and 2 are usually around 15 to 25% priced higher than our current pricing. There are special grades like we have the Bare Tab. There are other special grades which are a combination of CMC, carboxymethyl cellulose, and microcrystalline cellulose, and then there are other grades wherein there is silicon dioxide with microcrystalline cellulose. So there are various grades, and then they are priced around $7, $8, even $9 per ton per kg. So that actually speaks for the kind of pricing he has on his purchase, and maybe he transforms that to the customers in India at whatever good margins he gets. And he is the only sole distributor, so there is no other way people have than kind of reach out to him.
So, sir, as a follow-up question...
Thank you. Mr. Seth, I would request you to kindly come in the queue for follow-up questions.
No, just on this part, do we see our revenue also reaching from 1,60,000 to 5,00,000, sir, as and when we do more products or R&D? Just that's it.
So I don't see it reaching up to 5,00,000 because the product mix what he has and what we have are completely different. He is a trader, so he can trade in anything which is in need and demand for the market. Whereas we are very, very specific, and we are going based on related diversification or a cellulose base or places or products where there are synergies coming in. So we don't see our product pricing going up to that level. We have certain grades of special products which are as much, if not higher than that price, sir. But their percentage, like I indicated earlier, is much lower. Our special grade combination is only at 25% against the standard volume percentage of 75%. I mean 75 for the standard grades and 25 for the special grades. And the special grades are priced, more than 5,00,000, 6,00,000 a ton.
Thank you.
Thank you, sir.
We have the next question from the line of Vignesh Iyer, who is an individual investor. Please go ahead.
Hello, sir. Yeah. I wanted to know if, in this case, you've got value-added products as well as your normal products, right? So I just wanted to know for FY21 and FY22, what would be the mix of the sales when it comes to your normal product and value-added product? Because I want to understand, like, your company has grown from 139 crore sale in 20 to 193 crores and 250 crores. So I wanted to understand what is aiding this growth. Except for the realization part, what is that mix of value-added product and your other product?
So the mix is actually showing on the realization, sir. For the last 2 years, we have had a combination of approximately 75-25 and again 75-25 in terms of our standard grades and co-process grade or the special grades.
Okay, so means 25% of value added and your normal product is 75%, right?
Yes.
If I'm analyzing it rightly.
Yes, that's right.
Okay. My second question would be, this your sodium excipient, right? You're working on this new product. I just wanted to know what would be the capacity and when would the capacity kick in?
So the capacity is approximately 1,800 tons per annum, and we are expecting this to be on stream in the first quarter of the next financial year.
That was the last question. I now hand it over to the management for closing comments. Thank you.
Yes. Hello?
Yes.
Yes.
You may go.
Yeah. I thought I lost you. So thank you all for participating in this earnings con call. I hope we are able to answer your questions satisfactorily and at the same time offer some insights into our business. If you have any further questions or would like to know more about the company, please reach out to our investor relation manager at Valorum Advisors. And thank you very much and stay safe and stay healthy.
Thank you, sir.
Thank you.
On behalf of Research Bytes, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.
Thank you.